in LODR and ICDR. Friends, as you are aware that today we are conducting our 174th webinar, but till now we have done 173 webinar over the last 4 years with over 110,000 participants registered, more than 225 panelists, including judges, member of parliament, IAS, IPS, IRS officers, regulator from MCA, CCI, IBBI, SEBI, former regulator, industry experts, corporate professional and practicing professional have shared their knowledge through this platform. So this journey we are running continuously without any break. And we are so happy that we are sharing the recent issues, problems, and bringing out some solution to the professionals. And I'm grateful to all the participants also. They are also giving encouragement to us. So we are continuing this knowledge sharing journey. Friends, as you are aware that recently SEBI has come out with a new concept, and they started taking advice from the Industrial Standard Forum. And this forum is consistent of the FICCI, SOCHM, CCI, their representative, and some experts of various fields. So first committee was formed under the chairmanship of Mr. K.B. Kamath, and representative of SOCHM, FICCI, and CII were there, all prominent people. And then SEBI has given them a topics that these are the issues on LODR where the industry is facing problems. So they suggested to industry forum that you make a standard for that. And this is the first time that SEBI has come out with this unique concept. Though the standard accounting standards, the secretary standards are already there by Chartered Accountant and Institute of Company Secretary. But this is the first time SEBI has proposed industry standard. And the purpose of SEBI was that by doing this, all the industry experts are sitting, they are identifying their problem, and then they are bringing out the solution. And recent circular which the SEBI has recommended and Stock Exchange has issued is in the same direction. And first comment in LODR relating to rumors and various other aspects which we will discuss today. And this concept, if it is successful, then SEBI will come out and they will give to the industry forum various other issues which industries are facing. So industry's problem solved by the industry people for the regulator. It's a basic concept. Now, in the recent amendment of LODR and ICDR regulation, which is currently we will discuss today, the most important thing is discussion on material price movement criteria and disclosure of market rumors. As you are aware that there are so many market rumors coming in the market, it is affecting price also, it is affecting insider trading also. So various things are there. So there was no clarity and there is no issues that how to report this, because every company was reporting in different manner. So the industry standard forum has come out a unique solution that these are the type of issues and how you should address this. So we will discuss all issues like mainstream media, not in general, and material price movement, unaffected price, and various other aspects in this particular concept. Then we will discuss applicability of regulation on the basis of average market capitalization. That is another concept is there. Then harmonization of prior intimation of board meeting timeline, because which case you should give prior intimation, minimum promoters contribution, and then refiling of draft offer document applicability criteria. This is the part of this particular circular. Now, in this amendment, important amendment relating to market rumor. As you are aware, the proviso of Regulation 3011 of LODR regulation requires listed company to verify and confirm deny, or clarify. So there are three things very important: confirm, deny, or clarify. So either you are confirming that this transaction is taking place, either you are saying no transaction is going on, and you may clarify upon the material price movement. So there's another aspect is if there's a material price movement is taking place and there's a rumor, then you have to do this when the stock action is suggesting you certain parameters. So when this price movement is there and specified by the stock action, which is as reported in the mainstream media. So these are the 3-4 things which are coming. The rumor verification requirement shall be applicable first top 100 listed company with effect from 1st June 2024. So day after tomorrow, this law will be applicable, and then next top 250 listed company effective from 1st December 2024. So end of the year, we will have a 350 companies, those who have to follow this. So in the topic which we'll discuss today regarding market rumor, when market rumor will happen, material price movement criteria, pricing norms based on various regulation, because delisting, takeover, buyback, preferential issue, QIP, all has different pricing norms. Then most important thing is unaffected price. Then what is unaffected price? If there's some information is, some rumor is there and you are confirming, then you should get a price protection. So that is called an unaffected price. That is also very interesting concept and complicated. So we have to understand this also. Mainstream media meaning what? Because SEBI when came out with the earlier circular, they talked about the mainstream media, and mainstream media is coming out that there was no specific meaning of mainstream media. So the indication was this: anywhere some news is there, you have to confirm. So in this standard, the mainstream media is also clarified. What types of rumors will not be general in nature? Because sometimes you are saying, somebody is saying, hey, this company is taking over some company. And sometimes you are getting information that this company is taking over this steel plant. Now both are, one is very general, second is the specific. So the difference between general in nature and specific in nature is discussed, because otherwise what is happening, all small things, all small issues which is coming out in the market, which has no clarity and no specificity, you are giving a response. So that is also now curtailed. So the objective of the webinar is to discuss the LODR and ICDR amendment and gain insight into practical and potential implication and impact of the changes. Today, what we have done, we have invited the professionals, those who are in practice. We have invited stock exchange officers and the industry people. So these are the people who will give a chance. All three professionals which are there, they all are from coming of in the top 100 companies. So from 1st June, they have to follow this. So that's why we have invited very learned panelists today. So first I want to welcome Savitri Parekh. She has over 29 years of corporate experience and a company secretary of compliance officer of Reliance Industry. She has worked in a variety of sectors, including manufacturing, outsourcing services, private equity, media, pharmaceutical, textile, chemical. She's a specialist editor of Ramaiah Guide to Companies Act and general editor of MC Bhandari of Company Law Procedure. I welcome Savitri for this program, and your preparedness and your reading on behalf of everybody will help at how we should handle this. Then we have Narayan Shankar. He's also from the top 100 companies market capitalization wise. He's a vice president and company secretary of Mahindra & Mahindra. He has experience of more than 2 decades in the secretarial compliance of listed company. He was the second standard board member also of the Institute of Company Secretary also. So standardization of this standard of industry will also guide him that he can suggest a few things, that what are the issues is covered, what other issues are not covered. Then we have Parvati Sam. Uh, Normally we call him PK. He's a Chief Legal Officer and Company Secretary of Tata Steel. He possesses 19 years of experience in field of governance, disclosure, and reporting, risk management, ethics, compliance, and stakeholders management. He has been earlier affiliated with iconic companies that have set benchmark on corporate governance, that is Infosys. He serves on various committees of regulatory industry professional body that contribute to shaping governance principle for corporation in India. So I welcome PK, Narayan Shankar and Savitri from industry side. Then we have Mr. Lokesh Bhandari, is Chief Manager Listing Compliance at NSC. He has work experience in NSC around 1 decade, where he had been part of the entire listing department, both listing approval and listing compliance. Further, he is also closely working with various SEBI team and actively discussing on the various regulatory framework. I welcome Lokesh. And then another colleague of Lokesh is Dhaval Shah, is also here, is a senior manager, listing compliance at National Stock Exchange. And he will tell us the most complicated aspects of this particular circular, which is talking about the price, the verification of the material price movement and how to calculate this. And second is unaffected price, how we will handle this. I welcome Dhaval and Lokesh for this program. Then we have Anjali Agrawal, Partner, Head Corporate Profession, Capital Market Services. Ankit Singhi, Head Corporate Affairs and Compliance, Corporate Profession. And Manoj Kumar, Partner, Head M&A and Transaction, Corporate Profession. Friends, as you are aware that these are the people who are doing practice also, those who are working in the corporate also, and those who are the stock exchange, who will handle this. So today, we want to discuss all aspects, and interestingly, I was a member of this this industry standard forum from ASSOCHAM side, but today I will act as a moderator. So I will not participating as this is a rider that what we have discussed. I will try to gauge the mind of professional, whether any issue is there, any communication or confusion is there, so we can go back to the SEBI and tell them, or through a standard forum, that is still whatever we have standardized or we have clarified, even then these are the issues which are not clear. So I will act as your moderator and not giving you the insight, but certain things which are in my knowledge capacity, I will definitely share. So without doing this, I'll just tell you the structure of the program. First, Ankit Singhi will give a presentation of this circular. And in between, there are two concepts which are coming about the price, the material price movement and unaffected price, that how it is calculated. So Dhaval Shah from NSC will tell us the changes. So Ankit, when you are completing this, you stop and Dhaval will take over from there. And then you can complete the rest of the part. And after that, then we have a three giant of the industry. They will, we will discuss with them that what are the issues they are facing and what is the clarification. Maybe because you have understood, other people are not understanding the concept. So you please clarify certain points which has come in your mind, but you are clear. So you can tell this. And then we will have Anjali, Manoj, and other people. They will also talk about the certain change in ICDR and other thing. And I want to welcome Miss Aboli also. Aboli Petre is also there with the Dhaval. She is also talking about the same concept. So over to you, Ankit. And after that, we will have a question answer. And Manoj will cover the takeover issues in ICDR, and Anjali will cover buyback and delisting. So the changes which are there. And Manoj and Anjali, you are free to talk about the various concept which you are thinking you may face when you do think transaction. And we all will come out with some solutions, some pointer, some issues that even despite of the standard. What are the issues which are not clear? What are the issues which are further require some clarification? So all will work out so we can have a better compliance regime and better governance point of view, because this rumor verification is mostly affecting the small investor, because all these people who got the information, because small investor react later on when he is seeing something is happening in the market, and without knowing that the cream the people have already taken. So to protect their interests, SEBI has come out this concept, and that is a concept of LODR. So I request all the participants also, because you have a panel also, and you are from the various listed companies. Today, only 100 companies are covering, but tomorrow it's 250 companies. So all companies has to focus. So over to you, Ankit. Please give your short presentation on these topics, which are LODR and ICDR, and then I will go to the other speakers. Over to you.
Good evening, sir, and good evening to all the delegates and other participants. And I hope, sir, the screen is visible.
Yeah, it is visible, and
okay.
Yeah.
So I will just discuss the key features of the amendment with respect to rumor verification, and then I'll share the dash to Mr. Dhaval from NSC, who will take this forward. So the changes which are applicable of 17th May, the first and foremost is the amendments related to verification on market rumor. As Pavan sir has outlined the historical background about this amendment, so just to run you through, last year around similar time in June 2023, this sub-regulations were inserted under Regulation 30 as a proviso to sub-regulation 11. While sub-regulation 11, there was an obligation which was there on companies to verify information related to rumors in the market, but that was more of a voluntary or discretionary requirement. There was no mandate as such to outrightly confirm or deny any news in the market. And at times, stock exchanges used to reach out to the companies for seeking clarification, and basis that companies used to share their views on the news that have been doing around. Once the amendment was introduced as part of the LODR on 14 June, then subsequently on 15th July, the applicability dates were issued for top 100 and top 250 listed entities. That is from October 1st and 2023 and April 1st, 2024. But since there were a lot of issues which industry brought to the knowledge of SEBI on account of the requirement to comply with related to rumor verification, the requirement of dates were then further extended to February 24 and August 2024. Then basis thereafter, I've been in between, SEBI constituted the industry forum, and which apart from various other suggestions, I believe also suggested the requirement of having a price protection measure with respect to the effect on price that will be there if any corporate confirms market rumor. Therefore, to gauge the view of public onto the proposals, SEBI issued consultation paper seeking public comments on the mechanism. The consultation paper talks about the mechanism on both the material price movement and also the manner in which unaffected price will be calculated. As part of the unaffected price calculated mechanism, two proposals were outlined in the discussion paper. One was that the day on which the rumor was confirmed, the trading day prior to that day would be taking as a relevant date for any transaction which requires calculation of a price as per the SEBI regulation, and then backward calculation can be done so that the effect on the price on account of market rumor, the price which is ultimately calculated get insulated. And there was other proposal where SEBI proposed that instead of taking that date as a relevant date, the relevant date will be counted as usual, but the price that has moved during the period from the date of the price confirmation, rumor confirmation till the date of relevant date, there will be some adjustment on account of the material movement that has happened only on account of market rumor. And it was put to public consultation. Meanwhile, since the dates were nearing of February, then there was another extension, that is top 100 entities to June 1st and top 250 entities to December 1st. Then in May 17, finally, SEBI amended the proviso to sub-regulation 11, in view of the suggestion received from various discussion paper and the consultation with industry standard forum, and also instructed stock exchanges to issue the industry standard note that has been prepared by ISF, which they did on the 21st March by way of a separate circular. So this is the legislative history on account of how the provisions of market rumor have been till date. Now, if we see the basic documents or law that will govern this provision are twofold. Basically, first the regulation 30, specifically sub-regulation 11, and then the industry notes by ISF. Both have to be read together in order to ensure the compliance requirement and the manner in which the compliance needs to be done. While the regulation outlines the basic provisions as to how and what is the requirement, industry standard are a more detailed concept and outlines in detail as to and at what point of time, what kind of disclosure is required or not, what are the other relevant things that we will discuss as part of this presentation. Going forward, so understand the concept in very simple terms. There has to be a information and event that has been reported in mainstream media. It is important that prior to the amendment, the regulation talks only about material information and event as outlined in the regulation. So when it is read in the context of Regulation 30, it means only the information and events which have been outlined under Regulation 30, read with Schedule 5. And if there is any material and any information reported on that context, then only there has to be a rumor verification. Now, post-amendment, the requirement of specifically referring to material events and those referred in Regulation 30 has been removed, and only all information and event which have been reported in mainstream media. If any rumor is related to those, there is a requirement to confirm it meets the other parameters. But if you see more and so, the Schedule 5 items which are listed are so comprehensive that in some other way they will be covered in those cases only, and it will be difficult to identify any case outline or falling outside the Schedule 5. Then another important point is that it has to result in material price movement. This is a new introduction post when the original proviso was introduced in June, that any event or information where there is a rumor have been reported and it results in material price movement as per the specified framework by stock exchanges, then it becomes a rumor which needs to be verified, denied, or confirmed. Another important point is that rumor has to be of an impending specific event and not of a general nature. These two are very key important points. When it talks about impending specific event or information, which is something which is due, which is as per a standard, which is about to happen in an immediate future, and which is not general in nature. So this industry standard has also tried to specify the manner in which how a rumor can be said to be not general in nature. And I'll discuss in the other slide. If all these three conditions are fulfilled, then as soon as there is a material price movement, the time the material price movement is triggered, the timelines of 24 hours triggers from the date of the material price movement. Within that time frame, the companies have to identify and either clarify, deny, or confirm the rumor that is prevalent in the market. So I just talked about that rumor has to be not to be of a general in nature. So the ISF standards very clearly outline that in order to a rumor to be confirming the criteria of not to be general in nature, it has to be specific. It should be providing specific details rather than vague or just assumptive details by way of any publication in the mainstream media. If it's a vague rumor which doesn't give you any specific detail, then there is no rumor verification is required. It will said to be that particular rumor doesn't fulfill the requirement of proviso to sub-regulation 11. It outlines some examples as to how you will determine whether it's a vague or not specific rumor. Like, for example, in case of a divestment, it says company X is proposing to sell its fertilizer business as opposed to company X is proposing to sell one of its business. So in first, it is very clear that it proposes to divest fertilizer business as opposed to the second one, where it is outlining that there is a proposal to divest, but not clear what needs to be divested. Similarly, in respect to an acquisition, company X is evaluating a potential acquisition of ABC manufacturing facility, and as opposed to company X is proposing to acquire any asset. So if you read all the examples where example is giving you some specific details of the proposed transaction or proposed event, only which gives you some certainty as to what is there and what is proposed, only then it will meet the criteria that the news is not general in nature, which will require verification from the listed entity. Otherwise, if it is not meeting the criteria of being specific and it is vague or very general in nature, then there is no requirement to clarify the market rumor, and companies can take that call that it is not fulfilling the requirement of proviso to sub-regulation 11. So the key concepts, as sir outlined, there are two key concepts which are important to understand in reference to the compliance of rumor verification. First is material price movement, and other is price protection on unaffected price. So SEBI, I think NSE today have issued a circular outlining the framework as to how the material price movement will be considered, and basis that a rumor verification requirement will trigger. SEBI has already issued a circular outlining how price protection measure will be triggering and affected price will be calculated. And as the final outcome, SEBI has resorted to the proposal which it had recommended as part of the consultation paper, where the time period between the rumor verification and the relevant date during which there is a material movement in price, that material movement will be neglected, and the effect of that movement will not be considered while calculating the price for the relevant transaction if it is requires calculation of a price under relevant SEBI regulation. So just to give you a brief idea in terms of while Dhaval will take this forward in terms of giving you an understanding of how both these framework will work. So for example, a material price movement, how it works, there is a rumor which is reported in mainstream media. If it triggers material price movement, there is a rumor requirement needs to be verified. If no material price movement is triggered, nothing needs to be done. Similarly, if there is a material movement in stock price that has triggered, then companies need to identify, if they've already not identified, whether there is a rumor in the mainstream media. If there is a rumor in the mainstream media, then as soon as the material price movement is triggered, the 24-hour window has started and you have to take the necessary steps to even verify the same. And then there is no rumor, there is a material price movement. It might be on account of other factors not relating to the company, economy, government, some factors which are outside the company. Then in that case, there is no need to give any clarification. What we need to do, even in that case, there is a material price movement, there is no rumor in the market, do stock exchange entity still need to give some confirmation as to there is no rumor which is there impending in the market, because at times when there is material general, otherwise good volatility in the share price, exchanges do reach out to the companies for clarification, and they do give clarification. So whether the same will be adopted going forward, or companies need to come on their own to give some comfort to the exchanges that there is no rumor which is there and which needs any kind of verification from the listed entity. On the price protection, the requirement of price protection as outlined in the consultation paper, and because as soon as any listed entity on account of the compliance requirement under sub-regulation proviso to sub-regulation 11 confirms a rumor, and as a result there is a rally in the price, then it might hamper the price which would have otherwise be calculated in accordance with SEBI regulations, and which would either may have some repercussions to that proposed event, because otherwise they would have not intimated the market, and that would have been only intimated very near to the actual transaction in terms of other provisions of the regulation. But since there is a rumor and companies are forced to confirm a rumor, then it will have an impact on the market price, both positive or negative, and both of them may impact the ultimate transaction. So therefore, considering the same, SEBI has provided further proviso to sub-regulation 11, whereby they mentioned that if any market rumor is confirmed within 24 hours, and the transaction involves, for example, a preferential allotment or a QIB or a buyback or a takeover, and where there is a requirement of calculating price based on the market price of that share, then the movement occurred on account of that rumor verification in the price of the shares will have to be neglected, or the price have to be insulated with that movement, and an unaffected price will be calculated in accordance with the mechanism as outlined by the SEBI. So in this way, it's a win-win situation for both the regulator and the listed entity. The listed entities will be comfortable to come out and make the disclosure, because they have some sort of advantage as to the price movement will not have a severe impact on the transaction. And SEBI, on the other hand, is also have the advantage that once the rumor is verified, then there cannot be much speculation around that news with respect to the shares of the company. So these are key concepts of price movement, material price movement, and price protection. I'll now ask Dhaval if he can throw much more light as to how material price movement will trigger as per the NSE circular issued today, I believe, and the circular, SEBI circular, which have been already there. I'll,
Okay,
if you,
Ankit, before Dhaval is taking, I just want to explain
Yeah.
because people are sometimes confused that what is the unaffected price and why this concept, because this is a new concept which is popular in other jurisdiction.
Hmm.
So friends, what is happening? Now there's a rumor and you are confirming that the rumor is correct. If company is confirming that rumor that I'm taking over this company or I'm selling, whatever it is, then after the confirmation, the price will go up or down. Now, in that case, if I'm confirming this and my price will be determined after few weeks or months when the transaction is taking place, that time I will be in a disadvantageous position. So that's why the new concept has emerged, unaffected price, that when you are confirming the rumor, then the price of that particular time will be the determined for your future transaction of preferential allotment, buyback, delisting, takeover. This is the concept. Now, how to calculate the price? Now, over to you, Dhaval. You please explain, and whatever I have said, you can add on those.
You have to unmute, Dhaval, you have to unmute. You have to unmute yourself.
Am I audible now?
Yes.
Yeah, perfect. So thank you, Pawan sir. Thank you, Ankit, and also thanking the corporate professionals for bringing exchanges on the call so that we could clarify our scenarios. So basically, the circular for the related to how to calculate the material price movement. This was issued by our surveillance team, and which they normally in the normal course of nature they used to do it in for last many years. So I'll just share my screen. If let me know if that is visible. I hope the screen is visible.
Yeah, visible. Just go to slideshow.
Sure. Okay. Now hope this is clear.
Yeah.
Right. So basically, how to calculate the material price movement. So basically, these are the few parameters wherein how the price is to be calculated. One is basis the price ranged variation for the cutoff. One is the index price variation to Nifty 50 movement. Price variation in the direction of the news basis the positive news, the negative news, and the opposite direction also. Fourth is the intraday price movement, which is to be calculated after 9:30. And fifth is the calculation on the percentage variation in the share price and the benchmark index movement. Not getting into much more into these details, we will directly jump to the calculation scenarios. So they basically in the circular, if you would have seen, there was a table which was given for the basis the positive news and the negative news. Considering first as a positive news, applicability for this will be for top 100 companies. Considering that majority of the top 100 companies will fall under the third bracket, which is a price range of the listed equity shares more rupees 200 and above. Now, there are two ways of calculating the MPM. One at 9:30, so that the companies will gain the benefit of the index movement, and second is after 9:30 when the market starts. So now considering we are at a position at 9:30, 9:30 if the market would have moved by 1%, I will have an opportunity of 3 plus 1%, the benchmarking index, which is 1%. The change in the benchmark index is 1%, and the 3% is the criteria which has been given already. So 3 plus 1, the 4% would be the criteria to check whether the company is falling into MPM or the MPM has triggered or not. Taking an example, if my price at say for example the close price, and just for to clarify it that whatever price from where we are calculating is to be the close price of the previous day. So taking an example of the company, X company having a price of rupees 100 on the previous day, on the day of on the day when the price is to be MPM is to be arrived. Taking an example is the company sits or the person sits at the screen and sees the price movement at 9:30 as 3%, which comes to 103, and the index at the same time at 9:30 has moved moved at 1%. So he'll have a benefit of 104 as the price. So at 104, if the company's price is also 104, then the company will have to check, the MPM will hit, and the company will have to check whether the rumor there's any rumor for that company or not. This is basis the positive news. Now we'll come to a scenario where there's a negative news. So same application has to be there for the negative news. If the index has moved in the negative direction, say 1%, then they will have a band of that scenario at 9:30. Now considering a scenario when after 9:30. So once the 9:30 hour gets complete and you are at a 9 hours at 9.31, the benefit of the indexation goes away. Then you will have to go by the criteria which is there as per the table, which is greater than or equal to 3%. If I'm falling into the bracket of rupees 200 and more, so I'll have a benefit of 103. So my price, my MPM for that movement at 9:31 would be 103. And the same goes for the negative rumors, that the benefit of minus 3% or changes in the band will be applicable for the company. Also, if this was the company, this was the scenario where the company has to decide the MPM, considering that exchange will independently continue to seek clarification. So just for the information of everyone, exchange was doing the scenarios and calculating the MPM and asking the companies for news clarification or rumor verification. It is not that because of this circular or this changes in the regulation, the exchange will not do their duties. The exchange will independently continue to seek clarification from the listed entities based on the rumors and the news clarification which is there in the market. I think.
Dhaval, can you go on the first slide? Can you go on the first slide? And on the first.
The third one?
The beginning, the first slide.
Yeah.
So there are these factors which have been outlined in the circular, and then there are those two tables that have been given,
Correct.
which has 3 columns. So ultimately, I have to rely on those 2 tables.
Correct.
And
so
in that
ultimately,
case,
for example, please.
Yeah, so my question was, ultimately we have to rely on both the 2 tables, either in case of positive or negative news.
Correct.
And the price movement has also to be followed by the listed entity itself. Exchanges will not give you any kind of an alert.
No. So currently considering what has came out in the circular is the companies has been given the duty to monitor their price and the MPM, and basis that they have to review whether there is any rumor for that particular moment when it has been hit, and they have to clarify the rumor verification.
And as I mentioned, if there is a price movement and there is no rumor, exchanges have also not asked for anything. Still, do I need to give any clarification?
Ideally, if taking the view of what is written in the regulation, it clearly, and by the ISF note also, in the ISF note, that if the MPM is hit and if there is a rumor, then the companies have to come ahead and clarify it.
Otherwise, nothing doing.
Otherwise, it is not required. Or else, what will happen? There will be additional some scenarios which might get created, and there could be a confusion in the market.
Okay. Yes, there may be scenarios where price movement happens to certain script irrespective of the movement, any rumor. Let's say some industry related news is there, broader industry related news is there, index is moving by 1%. However, particular company is moving by 4-5%. This is also happening in many of the cases.
Other external
It will not cover because we have
But it will not be covered because it may be a justified phenomena.
If you see now, there is a concept which is very clearly not in general in nature.
Yes.
So this concept which you are saying that industry is growing or some rate is going up, it is affecting all industry and it's not in general. So there is a very clearly example has given in the ISF note that specific information mean that somebody say okay, I'm taking over a company, this company is taking over some company. It is not. But if say so this company is taking over a chemical company, it is a specific. Okay, otherwise any type of any information anybody can give anytime. So we have to understand the specific and general in nature.
Correct.
Yeah, okay. Next.
But Dhaval, tell me one thing. There's a very thin line difference as to the example which Manoj was giving. Industry news is there, but in the media, a particular company's name is specifically given that this particular thing will benefit companies like Infosys, for example. Will that be considered as a rumor?
See, these whether this news is a vague or like is a general in nature or vague has to be decided by the company itself, because definitely, as you said, there is a very thin line of difference and it could be an interpretation. So for example, that news could be vague for you, but it is important basis the stakeholders. So the interpretation of the general in nature which is given in the ISF note has to be followed by the companies.
Okay, let me just ask the two gentlemen, the Savitri. Now, this is the issue which Anjali, Manoj, and Ankit has raised. So, what is you are taking over various companies? You are getting advantage of the government policy on international policies. So, and your price is also going moving up. So, what is your what?
So, let me actually take a step back and look at a specific industry scenario, something similar to what Anjali was just referring. Let's assume the span of control with respect to medicines undergoes a change under the drug policy, and therefore, based on the span of control, certain entities are likely to benefit because their turnover comes from products which are under control. So therefore the pricing control goes off, and the newspaper report says that, it's a factual reporting saying that the span of control has reduced. This move is likely to benefit ABC. Now, is this a rumor? I would say this is not a rumor.
Yes.
A rumor is one which is relating to an information which is not available to outsiders, which is the reason under see, we have to understand that 3011 is very closely linked to PIT regulations, and therefore, in order to ensure that there's no asymmetry of information, these provisions are relevant. So if there is a change which is external to the organization, it cannot be considered as a rumor, especially when it's a natural cause. Let's say, for example, the tax rate goes down because, or let's say, for example, there's a tax holiday which is given in 6 regions, and the entity therefore ends up having a slightly lower effective rate of tax. Is that a rumor? Answer is no.
No.
Similarly, the span of control going down, I would say it's not a rumor, because it is not something which is originating from the company. It's a natural that the price possibly has gone up because of that. Okay, so it's not something. Yes.
Savitri, let me just simplify. If your love affair is going on between you and the boy, it is a rumor. But when it is an announcement that the marriage will take place, that is not a rumor. So the point is very clear. Something between company and the person is going on. It is not known to the market. That is affecting price. It's a rumor. But anything which is general in nature, anything which is for across the industry, anything for everybody, because if I say the government is reducing the price of certain things and your company is also in that list, but 10 other companies are also there, that is not a rumor. And there's no need to, even the price is going up, there's no need to. So something which is PIT regulation type of thing, which is known to you, and it is not, and it is only restricting the insider trading. So that is. Narayan, you have any?
Yeah, let's say, for example, one can even stretch this argument a little further. Let's say the budget proposals, it happens during market hours, and let us say that the budget announcement reduces the tax on one of the products. It's very natural for the price of the scripts of those respective companies going up. That cannot be considered as a rumor. It's something which is triggered by factual events. Yeah, over to
Narayan. Narayan, your point, because
I agree. The basic principle both of you have mentioned. Basically, it going back to the basic definition, what is generally available information. information which is accessible to the public on a non-discriminatory basis, correct? I don't think there is any doubt on it, and all the examples which Savitri and you gave, and completely in line with it.
Okay. Okay. The Dhaval. Move further.
Yeah. Yes. So, should we?
Go ahead, please.
Yeah, Dhaval, your voice is, yeah. Dhaval, can you switch off your video and then speak? Dhaval, I think you can switch off, you can drop and then again join. Shivam, just call him and tell him. Ankit, do you find like the clarification which everybody has given, you find any issue in this now?
No, sir, it is very clear. It has to be speculative. Any government policy, it is something which has been in the market, has been approved by the government. There cannot be a rumor.
Okay.
The only question is that, for example, there is some rumor which nobody has tracked, and there is a material price movement. Since I don't know about the rumor, I am not able to track. I didn't give you any confirmation.
So
do I need to give any confirmation, to give any confidence to the stakeholders that there is no rumor as such, that the movement must be out of some other issues? Like the way exchanges ask you, and most of the time company gives you the standard disclosure that all disclosures under Regulation 30 have been informed, nothing is material which is pending.
Okay, Ankit, you have raised a very interesting point. Savitri, Narayan, and I'll just ask what Ankit is saying, that there is a price movement and there is no media rumor. Well, mainstream media is not saying anything, but there is a rumor, there is something going on, an insider knows it. So he is trading in the market. So how to control that, and how to, because there's no rumor in the market, so there's no need to tell. So only one incident, either both rumor plus movement should be the criteria, or if one segment is taking place, even then you have to inform. Law is saying you have to inform when both the things are there. But the point which Ankit is mentioning, it is insider trading is taking place. Somebody knows something and price movement is taking place. Your view, Savitri.
Yeah. So actually, mainstream media, they have very clearly listed 60 sources. So if there is material price movement as well as rumor which has appeared in mainstream media, then you need to either confirm, deny, or clarify the rumor which has appeared. Now, if there is nothing which has appeared in mainstream media, which means there is material price movement, but there is no rumor in the 60 sources, in any of the 60 sources, then nothing further needs to be done, because there is no confirmation, there is no clarification, there is no denial to be given. Talking of what happens in such an event, there are other regulatory provisions which will then kick in. Under 30 sub-regulation level, this will not be covered. Narayan, would you like to add something, please?
Only one thing, yes, what you're saying is right. If the threshold for materiality price movement is breached at any point of time in a trading day, then if there is a responsibility on the company to confirm, clarify, or deny, and you are not able to find a rumor, it appears what you are telling is right, that it is not right to keep bulldozing the market with news that we have not been able to find a rumor, etc. And appears that it will be a good practice for the companies to have an internal record of saying that they were not able to, they have scanned the environment, they were not able to get any rumor either pertaining to the listed entity or the group company or anything which will impact. The only thing is we would still require some clarification, because if you see the board meeting agenda relevant portion which was given of SEBI, which is probably I'll try to open that in few minutes time if I am able to get a hang of it. There in one of the points they have actually made a mention that even if the companies are not able to find a rumor, there has to be an explicit confirmation. The only doubt I have is that agenda item and what is there in the website. There are many contradictions vis-a-vis the industry standard no. So only thing is we have to just clarify with exchanges and SEBI which should really apply. If that note which is floating around as part of the VM agenda is a prior one, and all that has been considered by the industry standard and all the forums, and if there is no real requirement today as part of even the ISF or the NEC circular or any other, requiring companies to really clarify that there is no rumor, then I think we should just get a clarification that which really stands. Is it the ISF which is the final one, or the relevant portion of the board meeting agenda which is there in SEBI website as of now? That's the only addition I'll make.
Narayan, I just want to clarify one point that there are three things. One is mainstream media.
Right.
Second thing is there is a mainstream media, some rumor. Second is price movement.
Yeah.
Third is something is going on. Now, if anything is missing in this, the question is, suppose there is no rumor, there is nothing going on in the company and the price is going up. Then if we follow this, that company has to come out and tell, it is a very cumbersome process. Because in the market, there are so many technical reasons, option market, future market, this market, the position, FI buying, so many other things. So that's why price movement is taking place. So the point is, until the time these three things are not there, I don't think there is need to follow. You have a rumor and inside something is happening. That's why you can confirm and deny and do something for the rumor, but and price movement. So that's why it can. This is just my point of view. Dhaval, you please carry on.
Sure.
Dhaval, can you just
Sure.
yeah?
Yes.
Yeah.
Sorry, I had some technical issue.
No problem.
Okay. So should we continue with the framework related to unaffected price?
Yeah. Ankit, is it okay? Unaffected price?
Yes,
Yeah.
we can move on.
Sure.
Yeah.
I hope my screen is visible.
Yes, it is visible. Go ahead. So this is the same
So
thing. Yeah, which I have told unaffected price that something is you are confirming in the market. Then what will be then how to take advantage of this unaffected price? Go ahead.
Correct. So I'll hand over to Miss Aboli from our listing department. I think she will guide us further on how to calculate the price during the unaffected price.
Yeah, Aboli, please welcome. Please tell us.
Hi. So basically this, just a second. Yeah. So this framework for considering unaffected price, we have to consider this with respect to the recent amendment made in LODR, which states that there are certain regulations which require pricing norms to be followed at various places. For example, if a company is coming up with a QIP or preferential allotment, then there are certain pricing norms given in SEBI takeover regulation, SEBI buyback regulation, and so on and so forth. For example, master circular of SEBI on scheme of arrangement. So there are multiple places where company has to take into consideration the past traded prices of the stock in order to come to a certain pricing, which will be followed in the specific events such as QIP, pref, etc. So in that places, the SEBI is stating that the effect of the price, effect of this material price movement that has taken place should be nullified. That is, that it should be excluded when we are calculating the pricing as per the pricing norms in these certain events. Yeah. So, so for that, we can just take an example and see. So this is one of the examples of issue of preferential issue to made to qualified institutional buyers. So in that we have to take the average of traded price for last 10 years from relevant date. So now here, therefore, we are taking the case of 10 trading days. Now, if we see here that from 24th July to 5th of August is the time period we are going to consider. And in that, on 27th of July, there was a material price movement. And then on 28th of July was the date when the rumor was confirmed. And then the next trading day is 31st of July. So now, because these 3 days are falling in between the period of 10 days for which we have to consider the pricing, now the price adjustment becomes necessary. So now first we have to check what was the price on the date before the date on which material price movement has taken place. So in that case, we can see that that price is 1060.76 rupees. Now we are going to assume that for the next 3 days, whatever changes those have occurred in the prices, that has occurred because of this price movement and subsequent rumor confirmation. In order to negate those effect, what we are going to do is, while calculating the pricing as per the applicable regulations of SEBI in those events, we are going to take the price of the day prior to the date on which material price movement happened. That we will consider the pricing of 26th of July, which was 1060.76, and we will continue to take that as an adjusted price for all the 3 dates. That is, date on which the actual price movement occurred, the date on which rumor was confirmed, and the day following that day. So for all those 3 days, we have continued to have the date prior on which the price movement happened. Now post that, that is from 1st August onwards, we are going to adjust the price. How are we going to adjust the price? That we have to deduct the price that is 1173.16, the price falling on the 1st of August. We have to deduct the price that is 1060.76. That is the price when the effect was not there. So we have to deduct that and we will come to the adjusted price variation. Now that price variation in this case is occurring at 118.14. So now for all the future dates till the relevant date, we have to consider this price variation. So we are going to deduct this amount 118.14 from the closing price of each of this date from 1st of August onwards, and we get the adjusted value added price. So that way we can compute this price variation and nullify the effect of the price movement. And for one more thing is given there is, if for example on 1st of August, when I am actually going to start taking into consideration the price variation, if there is the market price hits the price band limit, then again I have to continue with the price of 1060. So till the time the market, the pricing of the share in the market stops stops hitting the price band, I will still continue with the price of 1060. And the moment it stops hitting the price band, I will continue with my price variation, that is 118.14, to be deducted from the actual closing price. So that is how we continue to compute the unaffected price.
Can you please explain what do you mean by hitting the price band?
Hitting the price band. So these are the surveillance measures which are basically put in order to avoid the extreme change in the prices of the our stock. So there are certain percentage, the price cannot go below that and the price cannot go above that.
So you're talking about circuit.
Yeah, circuits basically, yeah.
So in case, let's say we are registering the price of 1st and 2nd August, if there is a reverse movement of the price, and the price is now falling continuously, and still we are deducting 118 from this, what it will it not impact negatively on the valuation or pricing at which offer or allotment should happen?
Yes, sir. But actually, see, once that trigger has happened, we have to continue with this same formula given by the SEBI in the circular. So I agree that the price movement can be in either of the direction.
Yeah.
However, we have to continue with the same direction. That is, if it's to be added or deducted based on the earlier circular that Dhaval explained.
Okay, yeah. So that is because it is in the SEBI circular.
Yes,
That
yes.
is, but they have not considered this fact that there may be post reamer verification, there may be negative movement of price also, and
Yes.
that can be substantial. For at least
Yes.
for top 100 company, there may be 20% circuit filter. So 5% is very small part, and it may be 13%, 18% movement backward also.
True.
And if again we are keep reducing the price due to this differentiation, then there might be substantial reduction in the price, even considering the normal movement of the price, normal price movement.
Yes, sir, I agree. But we have to follow currently at least what is given in the circular.
Okay.
So I think that was it from the exchange side. I think Ankit can further move.
Aboli.
If there are queries, I think we'll happy to take the queries.
Aboli, tell me one thing. The example for preferential issue, this is perfectly fine. But for a QIP issuance under ICDR, we don't have to calculate VWAP. We just have to calculate the 10 days closing prices.
Yes.
There is no impact of VWAP. So how will this new formula be applicable over there?
So,
because in the ICDR, yeah.
Yeah. So, ma'am, even though we are not giving, it's the weight. So, basically, when we compute the pricing, here the weight that we give is the weight of the number of trades. Right?
Okay.
So, here the SEBI has specifically included QIP as well in this calculation.
I agree. Yeah, I know.
Now, where we are adjusting the price, here also, we are adjusting the price and we are multiplying it with the volume.
Okay. No, but then if I do a
so
QIP,
in the example, yes, in the example, SEBI circular clearly talks about QIB and also talk about the VAP, not the closing price. So this is, I think, this may be may require SEBI's clarification, but otherwise the adjustment would be the same. The closing price adjustment would happen, I think.
Yeah, because in all other cases, takeover, buyback, there is a
everywhere it is
VWAP.
Only here it is in case of QIB, it is a closing price.
Yeah,
it's an averaging of high and low closing day. So then that needs to be clarified by SEBI.
Aboli, suppose the price is continuously going down. So we have freeze at 1060 and the price is going down, it is not up. So what will happen? That will be a loss to the company because 1060 price you have mentioned. And then last you have mentioned relevant date is 1094. Suppose this price is going to 1020. It's going down. Then which price I will take?
Sorry, sir, could you please repeat? So you are saying we are taking.
It is very much similar to my question. What I have, there may be negative movement, reverse movement also. So right now there is no differentiation given. It is only the adjustment for the remote verification, which is confirmed.
Yeah.
So there may be a second rumor also, which is pulling down the price. So that verification may also come, and then there may be further movement or further adjustment for the price. So there may be two verifications also in sometimes. One positive news and one negative news. That kind of situation may also arise.
Yes, so there can be multiple permutation combinations. Again, in between the corporate action can also happen. So there are n number of ways, the adjustment would take place. But currently, as of now, based on the discussions and the circular that we have, this is the confirmed idea that we have with respect to adjustment of prices.
Right.
And Manoj, there is an other important aspect also, that if the rumor with respect to the transaction, there is further development of any rumor and you give a further clarification, then the price protection measure will trigger again.
Yes,
Yes.
yes. That's
Yes.
what I'm
So
saying.
it can
Yes.
be at multiple instances that you have to, the price is being recalibrated to
Recalibrated.
determine the
Yes.
actual price.
Okay,
Yes.
Savitri, the Ankit is asking this question. Do you think it will not be a cumbersome process then? How what types of clarification SEBI should give? Because otherwise, multiple rates, you have some, it's a price protection actually. Price affectation is basically for the benefit of price protection, because you should not be at loss. But sometimes this can go in reverse direction. So should I follow my price or should I follow the protected price?
So I don't think there's a direct answer to this, Pavan, because this is going to be, as was also mentioned by Anjali, there could be several corporate actions in the intervening period which may also affect. So I don't think there's a direct answer to this.
Okay, okay. Ankit.
Sir, in addition to the question that what Manoj was asking, when there is a downfall in the price and we are looking at corporate actions like buyback or delisting, wherein we are returning the value to the shareholders. So that means we are excluding the prices and we are giving a lower price to the shareholders. When we
Anjali,
talk about
this is because this price is two types. One is which is advantageous to the company or shareholder. One is the disadvantageous to the shareholder.
right,
Like takeover, delisting, buyback is if the price is going down, it is loss to the investor. Okay.
exactly.
Further after the unaffected price. But if preferential issue is there, QIP is there, if rate is done, then loss to the company. Okay. So we have to just get the clarification from SEBI, certain new dimension, what will happen.
I think journey has just started in this direction. So there will be further clarifications and changes which will come soon.
Ankit, next.
Okay, so I'll now put back my presentation. Just give me a sec. Just give me a sec. So this we have already discussed. Then there is a timeline of
Ankit,
which.
Ankit,
Yeah.
just one point. Narayan has shared me a good board meeting agenda of SEBI. I was just mentioning that there's a material price movement and there's a rumor, and third is something is cooking up. But here SEBI's agenda is saying, in case there is a material price movement, but the listed entity could not ascertain any rumor circulating in the mainstream media, the listed entity would be required to clarify the same to the stock exchange. Further, in case there is a material price movement and there are multiple rumors pertaining to specific impending events, the listed entity would be required to confirm, deny, or clarify all such rumors. So it means SEBI's agenda is talking about even their price movement is going on, even then they have to clarify without any rumors also.
Okay. But I think the standard doesn't talks about, I think, this requirement.
Yeah.
Okay. So I think another important aspect with respect to the price protection is the timeline as to the look back period. So the ISF and the circular talks about a timeline of 60 days and 180 days, which means that from the day the material price movement triggered and you confirm a rumor, the price protection, then the unaffected price calculation is available for the period of 60 days or 180 days, depending upon the nature. The ISF outlines two types of situation. 60 days is where there is a binding term sheet has been signed, the key material terms have already been agreed. So the transaction is going to be implemented soon. So there is a 60-day period. And then there is a 180-day period that they've outlined in case where there is a competitive bidding going on. You have confirmed that you're participating in that bidding. but that it's a due long process where the actual bidder will be finalized and other things will also be finalized, contours of the transaction. So which means that the price protection, the relevant date in either of the case has to be within 60 days and 180 days to take effect of the unaffected price. If the relevant date goes out, then soon after the 60 days and 180-day period is over, you don't get the adjustment in price after that end of 60 days or end of 30 days. Then the normal price will take effect, and when you will calculating from the relevant date, the portion when the 60 days and 180 days period have completed, then it will be in two parts. The price where it is after 60 days and 180 days, that would be the normal price, and before that, up to the period of beginning of the timeline as per the relevant day calculation, that will be available for you to use the unaffected price. So in that case, there will be both unaffected price and the normal price that will be considered for the purpose of determining the actual price in terms of the relevant SEBI regulations, whether it's buyback, ICDR, or whatever the may be. Another thing is mainstream media. So the one of the important sore point when the proviso was introduced with respect to rumor verification, alongside the definition of mainstream media, but the definition was very, very wide, and it was very difficult for corporates to track such a wide scale media modes to determine whether there is a rumor which is there or not, and it includes international publications without any limitations. And on that aspect, I think ISF has done a very good job, and as already mentioned by Savitri ma'am, that they've outlined around 60 sources from which you have to figure down as to where there is any rumor which is pending. So like, for example, in terms of English dailies, they've identified a criteria. It has to be RNI registered, top 20 newspapers having a circulation of 1 lakh or more copies per publishing day. They have given a list in the ISF. Similarly, in terms of business dailies, they've identified Economic Times, Business Standard, LifeMint, Financial Express, and Hindu Business. And these all only would be considered in terms of business dailies. Then regional dailies, they've identified criteria for top 2 regional dailies having 22 circulating in each of the 22 languages. Based on that, they've identified 11 languages, 11 newspapers. 11, sorry, in respect of regional language, there are 11 regional languages that have newspaper publishing the RNI circulation threshold that have been also given as part of the ISF. In terms of websites, all the websites of all these newspapers which I've just mentioned, then Bloomberg, BQ Crime, Money Control, Business Today, Reuters, all these are also considered for the purpose of mainstream media in terms of the news and current affairs website. Mainstream media outside India, as of now, the ISFF only considered key business jurisdictions like USA, Singapore, Mauritius, Luxembourg, and UK. And from there, they identified these top 3 jurisdictions: USA, Wall Street Journal, Financial Times; Singapore, Business Times, Financial Times; and UK, Financial Times. Alongside this, they have also cast an obligation on the top listed and under listed entities to determine a criteria for determining material international jurisdictions where they have material business, and on those jurisdictions identify the key newspapers and other mainstream media sources that they will be tracking to identify market rumors and publish both the things as part of their materiality report. So this is an additional exercise which these top 100 listed companies needs to undertake in addition in order to find out additional sources of mainstream media outside India. Business news, this is CNBC, ET, these are business channels which have been outlined as part of the mainstream media. The ISF very clearly outlines social media platforms will be excluded from the ambit of mainstream media. So WhatsApp, Instagram, Facebook, LinkedIn, these will not be considered as mainstream media, and any rumor which is published there in these mainstream media need not to be verified by the listed entity. Then the ISF also gives you some examples of in an M&A transaction how to deal with it. For example, there is
Ankit, just one is news aggregator is also not part. Just go to the first slide of this. Yeah, this I'll tell you very interesting Indian English daily news. If you see Annexure A of the circular,
yes,
interestingly, we have Hindustan Times, Times of India, Deccan Chronicle, the Hindus. But interestingly, there are 5 newspapers
of Jammu
which
Kashmir.
is coming in Jammu, Kashmir. Jammu edition of Acceler, that is also there. Jammu edition of State Times, Jammu edition of Early Times, Jammu edition of State Vision, Journey Line. So I don't know, North Lines, that how these 6 newspaper is coming out of 14 from Jammu. So the circulation is more than 1 lakh, or it is a mistake that has to be verified, because these Jammu newspaper, the population is also less, and the 6 newspaper is coming from Jammu. It's a something surprising. Yeah, go ahead.
Okay, so now with respect to the other things which the ISF talks about, for example, in M&A transaction, the IFX talks about how to deal with this situation during the preparatory stage and advanced stage. Like in preparatory stage, they've identified stages like signing of an NDA or a non-binding term sheet, a due diligence process. So where they have, because since it is not an impending event which needs meeting confirmation, but they have given an illustrative list in case the company wants, they can give some kind of clarification, and it is a very general clarification, general language, without referring any specific details about the transaction. But if the transaction is an advanced stage, the bidder has been selected or the finding term sheet has been signed, then also the ISF provides you illustrative manner of how the disclosure needs to be worded and in what manner, what details it should contain. So in that extent, the ISF contains a lot of illustrations on both M&A, non-M&A transactions, outline how in various stages and how to deal with disclosing or confirming rumors about those stages. So to that extent, I think ISF is a very good document. Similarly, with respect to changes in KMP, the ISF talks about that if it requires where there is a rumor regarding potential change in KMP, it only requires a specific confirmation when there is an acceptance by the company of the change, of if the process is started. For example, some internal agreement has reached out that somebody is going and company has appointed any executive agency to look out for a suitable candidate, and then there is a rumor, only then it needs to be confirmed. In all other cases, there need not to be any confirmation. Similarly, on health related things, there is a rumor in the market about an health of some MD and CEO. Then only if the MD and CEO has received medical advice where it is indicated that he is now available for 45 days over a period of 90 days, and he has informed that to the company, only in that case and confirmation is required. In all other cases, no confirmation is required until unless the MD or CEO has received the relevant medical advice, because in that case, just a rumor. There is no requirement of giving any confirmation. Similarly, 11A has been added in the regulation where an obligation has been cast on the promoters, directors, key managerial persons, senior management to give all requisite information to the companies to ensure the compliance with the proviso of sub-regulation 11 to the regard of confirmation of the rumors if there is any market. So there is an obligation which is put there. It is also, I think, part of the discussion paper that have been floated by SEBI. So these are all key issues which are related to rumor verification. Sir, if you would like to take views of others on these.
Ankit, remaining things are very small. We
Yeah.
have to focus more because that is a more complicated. So Savitri, Narayan, Dhaval, as you are aware that these are the very important things. Rest of the things are just for the information. So let's focus more time on this. So Narayan, what are your views on overall things and where you see problem as a compliance officer of the company? Because now this is your responsibility. The SEBI is saying you have to do everything. You have to identify where is the rumor. You have to search. Then there is a price movement you have to give. Now you have just sent me a note also, which is also there, where they are saying if there is a price movement, there's no rumor, even then you have to clarify. So it means the compliance officer is always on the toes. Okay. And then second is, suppose there is a rumor and you have to deny, clarify, or accept. There is a process also. The standard forum has given a draft also. So where you find as a compliance officer problem?
Well, just broadly, I don't want to repeat what previous people have already repeated. Just, I think positives, yes, Instead of material events under Regulation 30, it is material price movement. Instead of 24 hours starting from reporting in the mainstream media, it is 24 hours from the time your NPM has triggered. We all made a mention, even Ankit has made a mention that you'll have to track it at two stages, one at 9:30 and one thereafter. And as you are aware, we've had this chat even last week with the exchanges. The index movement is only available for your 9:30 a.m. share price. Even at 9:31, it becomes intraday, so index movement is not required, is not available. So in a manner, index percentage is really not that beneficial unless there is a clear clarification coming that even beyond 9:30 it can be used. Otherwise, even though index goes 2% above, 3% above, if you are in the 3% bracket, you have to give a confirmation, clarification, or a denial. The second point I thought, which Ankit touched upon, was NDAs. And this is an important point for all compliance officers. This non-disclosure agreement will not exempt listed entities from market rumor confirmation. So even if you have signed an NDA, you will have to go out and really go and confirm. In fact, we have started speaking to even legal counsels as to whether the way we've got many carve-outs as part of the NDA, whether the fact of the listed entity requiring to do a CCD, clarify, confirm, or deny, pursuant to a market rumor, can also be pitched as a carve-out for that NDA. But that is all okay if it is a bi-party. But if you are a bidder and you hardly have a choice, it will be a tricky situation for all compliance officers over there. We've already spoken, Pawan, about company not able to find a market rumor. According to me, it will be a very good case for exchanges to ask SEBI that if there is no market rumor floating, there is no need for the companies to really go out and each time say that we are not able to find a market rumor. I don't think that's really required. Probably there could be a clarification which exchanges could seek, because this particular VM agenda probably may be prior. The industry standard form, it has to be treated as final, that there is no requirement, and hence I feel there may not be required. Then you say if there is a material price movement today, and today I'm not able to, yesterday, I'm not able to find the market rumor. We also had a chat with exchanges. What should be the look back period? Broadly, we've given guidance internally, at least see 4 to 5 days back as to is there any rumor which probably has impacted the price today. So if we cannot restrict it, what I'm wanting to say as compliance officer, we cannot restrict it only to one particular day. It has to go at least 4 to 5 days prior. The second point is there is an exemption given only to the listed entities if you have given a notification under Regulation 29, that is prior notice, correct? As you're aware, sometime days before the board meeting, you'll have a slew of analysis, expectation, estimations coming out. The point is, if you really want to take advantage that you are not going to comment on all those, you have to fall that you have already given a prior intimation of the board meeting. And if it is relating to the financial results or dividend, which is already mentioned, then only you can get into that exception. So while exchanges, Ankit had shown in a slide, exchanges have now given a standard 2-day requirement, but I think it is not right for the company to wait till the last 2 days. Otherwise, if you don't give it in advance and if there are rumors pertaining to the results, then you can't take a carve out of say that I have given 29-1. Only if you have given the 29 advance information will you be able to get into the carve out. Otherwise, it will be difficult. Then unaffected price we've had, there were 2-3 points, but I think Ankit and Manoj have broadly clarified, including positive, negative, because even if you are talking about the unaffected price could actually go negative. So what about that? We have already cleared. Obligation on promoter is clear. As compliance officer, what is really today the other point where we will be struggling If it is black or white, it's clear. I will accept or deny. The key point for compliance officer is if it is in gray. That means if it is neither full truth nor can you deny, it's Argo Satya, the way we call. And there, I think itself, Industry Standard Forum have done a good job of giving multiple examples, multiple leeways, including language as to how it could be done. In the last meeting which we had, even there was a question raised as suppose we're going to do a regulation 30 announcement tomorrow, and today there is a leakage. Does confirmation to market rumor give you exemption for an investigation to UPSLE? Answer is definitely no. Whatever is required under the PIT, LODR, that you have to investigate into leakages, you will have to do it. This does not give you any leeway. The next point is what we spoke about is generally available information. Okay, today they have given a carve out in that definition which says that it will not include unverified event or information reported in print. So the counter question which is raised is, if you verify a particular rumor, correct, are you out of UPSI? Can the trading window be open? That means post confirmation of a market rumor, specifically if the company confirms, would it still be an UPSI? My answer is definitely till the time you disclose under Regulation 30, it will still be UPSI. As you are aware, under PIT, there are 3 stages, timelines when parties have open discussion. You will then have UPSI period, and then you will have final signing. On UPSI will get germinated earlier. You will close the window, but merely during the UPSI period, if you are confirming something, please, it does not get you out from the UPSI, and you can't just open the trading window and then say probably it's fine for people to trade. That's really not allowed.
Sir,
Okay?
unless I have disclosed all key contours of the information.
That will be quite difficult.
I understand that will be difficult because that is the only
disclosure has
reason
to be as per Regulation 30, detailed disclosure.
It will continue to be an UPSI because.
Okay. So, Savitri, you have Narayan.
Just continue with points. The next is pertaining to a subco. That means if the price is moved up or down, and even if it is an unlisted subsidiary, I will not be able to take a call. It's an unlisted subsidiary and it's a rumor. It can still impact me. I will still have to confirm or deny. Only thing is, if the subcos are listed, like in our case also, there are multiple companies which are listed. I will have to have a process of getting a confirmation or clarification from the concerned listed entity so that they are also clear. If required, they also have to give confirmation. The next point I wanted to cover is foreign jurisdiction. There is always this requirement whether you have to go to the board immediately before 1st June with a circular resolution. As you're aware, the industry standard notes have given 5 jurisdictions: US, UK, Singapore, Mauritius, Luxembourg. They have even given clear publication which will come. And the key point is what is really material operation. Probably we can take a cue from the materiality threshold in the 34(1)(c). And depending on that, if the turnover of the top line of or the contribution from that foreign jurisdiction is crossing, then probably yes. But if you do a dipstick and you find that none other than this 5 jurisdiction, there is no other material operation, then there is no need really for you to go and approach the board. You can even do it in your next quarterly meeting where you will take changes in your policy for materiality and code for fair disclosure. Over to you. Sorry, I didn't get the point on UPSI, but I'll address it later after Savitri.
Okay, Savitri.
Sure. Actually, Narayan has very exhaustively covered, I would say, most of the points, and the only 2 points that I would like to add are, with respect to LODR, when a company looks at disclosures, the specific provision that the company secretaries would look at is Regulation 30 and Schedule 3, Part A, Para A. And of course, if the materiality threshold is exceeded, you also take a look at Para B of Schedule 3, Part A. Now, with respect to rumor verification, it has no correlation with material events, with Schedule 3, which basically means that when you're referring to rumor verification, it will not be restricted to items listed in Schedule 3. It could be with respect to any item. Of course, what has been illustrated mainly refers to items which are listed in Schedule 3. However, if it is a specific identifiable event, uh, if it is an impending specific event, then in that case, you would be required to confirm, deny, or clarify. Now, here, the material price movement is what is going to be the prime trigger, and then you will need to see whether there's any rumor in any of the 60 sources. If yes, you will need to either confirm, deny, or clarify. One would, of course, would say that it has to be any of the events listed in Schedule 3, but I would like to specifically mention that it need not be restricted to Schedule 3. For example, if it is a para B event and it is well below the threshold, even then you would be required to confirm, deny, or clarify. This is something which is pretty important. The other point is uh, the other point is with respect to the board note, which Narayan was mentioning. While the board note does refer to rumors circulating in the market, however, it would be it would be good to get a specific clarification that if there is no rumor in mainstream media, no suo motu response is required from the company. The other point is that it's very clearly stated that the stock exchange would be further entitled to raise queries under Regulation 3011. Just because the company has to suo motu give this does not mean that the stock exchange will not be entitled to raise queries, and the stock exchange queries would not be actually restricted to the mainstream media. It could be with respect to anything which appears anywhere. So these are the broad points that I just wanted to cover. Narayan has anyways exhaustively covered the other points.
Okay. Dhaval, you have any other point in this?
No, I think what Savitri ma'am said and Shankar sir said, I think that got covered everything. So I think that was more than enough. I think for the company secretaries and professionals to get their insights from the to one of the leads of the company secretaries department and the compliance department. So I think that was it. So just for the companies, just they need to follow the ISF note, the circulars of the stock exchange, and the calculation basis that definitely they will be able to comply with the regulation.
So you have said very easily that company secretary and the compliance officer can do, but now under this particular thing, first you have to see there is no rumor in the market, then you have to see the price movement, then you have to calculate the price movement, then you have to confirm
Definitely.
and all these things. And there is another point also, which is in the note also. Sometime what is happening, company is not aware. Promoters are doing something. That time also that is another issue.
100%.
Company is not aware.
100%. And
So how to
100%.
do that? Yeah, that is
And
also
I think
come.
that's the reason I think one of the provisos has been added in the LODR, that the companies have been given the power to get that information from the promoters, subsidiaries, etc. So I think that benefit SEBI in their regulation has given it to the company secretaries and the officers so that they can get the information from the promoters, subsidiaries, etc.
Okay, Ankit, just complete it. Then I will go for the question answer.
Okay. So other changes are also in terms of what there was a discussion paper in terms of harmonizing the prior intimation timelines. Since under Regulation 29, there were different timelines for different nature of events. So now SEBI has now harmonized all the events, and they have provided a specific timelines of 2 working days for all, excluding the day of intimation and the day of the event. So that is important. Prior intimation of price in terms of QIP, because that is not there, has been provided as an exception, because otherwise there is a requirement to disclose the price also. So that's in line with the discussion paper. Similarly, for fundraising, they have clarified that it involves issuance of securities, excluding security receipts, money market instruments like commercial paper, securitized debt instrument. In all the cases, all other securities will be considered for the purpose of making intimation under Regulation 29. Other amendments with respect to KMP CFO, where there is a requirement of getting any regulatory approval in case of any vacancy, then they have to ensure that the period of 6 months is what they have to within the period of 6 months they have to ensure that the appointment takes place. There might be some challenges around this provision because at times these approvals are stuck at regulatory end, and it would be difficult to comply this requirement of 6 months. I have seen in some cases where it takes a very longer period, though companies do take care of that, but in case of vacancies arising out of resignations or those sort of things, it might be difficult times to comply the requirement of 6 months because this is not something which is in your control. Still, considering the then other proposals in the discussion paper, the time gap between two maximum time gap has been extended from 180 days to 210 days between two risk committee meetings. Timelines for mandatory compliance for high debt listed entities have also been extended. Earlier, it was March 31st, 2024. Now, up till March 31st, 2025, they can adhere to these provisions on comply on explain basis. Thereafter, it will be mandatorily applied to all high debt value listed entities. Then there are some amendments which are applicable from 31st December. Most of them are related to market capitalization. So as per the discussion paper issued by SEBI on this aspect, there were a lot of issues which were raised by the corporates as that adjudicating a company on a market capitalization on a single day may not be the right parameter or parameter to gauge the applicability of compliances on that particular day because of market capitalizations. And since most of the market capitalizations were triggering on 31st March, and the provisions were immediately triggering, therefore companies were not getting enough time to ensure compliance with those provisions. So in order to create a level playing field and to bring more objectivity in this provisions, now they have introduced a new concept whereby from July to December, an average market capitalization will be calculated, and on 31st December, a list will be published. Basis that list, the top 1,000 and top 2,000 will be calculated. And then you will be getting a period of 3 months from January, February, March to ensure compliance with these provisions. And effective from 1st April, you can ensure that all the requisite systems are in place to get the compliance done. And earlier there was a requirement once the market capitalization norms are met, it will continue to be there for long. But now there is a sunset period that has been provided. So once a market capitalization norms get triggered, but on 3 occasions on 31st December, if you are below the required market capitalization, then from the respective relevant financial year, the market capitalization norms will not be applicable. And for calculating the norms, the highest ranking across exchange will be used. They have also given an illustration whereby they have outlined as to how this will be calculated. This illustration was part of the interim report that was submitted and was part of the discussion paper. This illustration doesn't form part of the amendment in the regulations, but this gives you a clear indication as how to calculate the effective compliance of when the compliance will be triggering and how you will be getting out of the market capital norms if you don't comply fall within that limit for a 3 consecutive 31st Decembers, and then you will be out of from the next year. Now, amendment in ICDR regulations. I'll ask Anjali ma'am to take this forward.
Hello. Am I audible?
Yes, you are.
Yeah. Thank you, Ankit, for taking up the LODR amendments in for such an exhaustive manner. In addition to the LODR amendments, there have been some amendments in the ICDR as well. The most important being from the perspective of the IPOs and the way IPOs are coming these days. It is very important. We all know that the minimum promoters contribution of 20% is required in every IPO. Up till now, conversion of conversion of convertible securities was not covered therein. But now it has been allowed that specified securities allowed pursuant to the, but it will, if the specified securities are allotted during the last 1 year period, the same shall be eligible for minimum promoters contribution. Next. Further, under the ICDR regulations, it has, with regard to this 20% contribution, if this 20% contribution is not met with, under the present norms, AIFs, venture capitals, scheduled commercial banks are allowed to contribute towards this 20%. In addition to these lists, few of the additional people have been allowed, where in any of the non-public shareholders holding more than 5% can also be allowed to be contribution towards the minimum promoters contribution, and any person, this may be an individual or a non-individual belonging to the promoter or promoter group, can also contribute towards the set 20%. The biggest benefit of this would be in case of startup companies, wherein there are public shareholders, there are investors who hold more than 5% in the company. So they'll be in a position to be contributing towards this 20% 20% limit. Schedule 16 of ICDR talks about refiling of the offer documents, including DRHP or the DLOFs. So till now, the limit that was mentioned was estimated issue size. If there is a change of more than 20% of the estimated issue size, then there was a requirement of refiling. But here the regulator has clarified that this estimated issue size 20% has to be in terms of the issue price, rupee value of the issue size. It's not to do with the numbers. It has to be with regard to the issue size in terms of rupees. And in case of offer for sale, this 20% is 50%. If there is a change of 50% in the rupee value of the issue size, then the refiling is required to be done. Likewise, under the present norms, under the erstwhile norms, the issuer was allowed a minimum 3 days extension beyond the bidding period due to force majeure events. But this 3 days has been reduced to a minimum of 1 working day only in force majeure circumstances. Otherwise, no further extension of the offer period will be allowed. These were some of the amendments in the ICDR regulations.
Okay, Manoj, can you just cover amendment in takeover regulation?
Yeah, so I think the amendment in the takeover regulation is mainly with respect to this material price movement. So now, in case of takeover open offer, the acquirer need to calculate the price based on the market also in most of the cases. So in that case, it is the law says that the volume weighted average market price of last 60 trading days from the date of trigger to be one of the criteria to of the open offer price. So there has been a change in regulation 8 and 9 of the SEBI takeover regulations, and where it is provided that in case there is a material price movement and that due to rumor verification, and due to that then they are allowed to adjust the offer price with respect to these movement. It will be very much similar to as we were discussing relating to the QIB or private placement of shares. So the merchant banker, while calculating the 60 days volume weighted average price, may exclude those period and adjust the price, volume weighted average price, to determine the offer price. But this is the language is the price may be adjusted. So it is not mandatory that in all the cases there will be adjustment, and it is mandatory for the merchant banker to adjust the price. It is optional kind of thing. If they find that there is a material upward or downward movement, then it should be adjusted for the benefit of the transaction parties who are in part of the transactions. So generally, merchant banker being a representative or there to protect the interest of the public, if the movement is downward, then he must adjust. They must adjust the price, and otherwise, it may they may choose not to adjust the price because it is giving the minimum threshold for the offer price. That is the major amendment with respect to takeover regulations.
So Manoj, that means, as I was asking earlier as well, with regard to takeover or buyback or delisting regulations, where we are returning value to the public shareholders.
Yes.
So because the word used is may, so depending on whatever is the maximum price coming, with adjustment or without adjustment, we as merchant bankers should be considering that.
That should be the right approach for the merchant banker, because obviously SEBI want a merchant banker to take care of the interest of the public category shareholders. They have not said that has to be mandatorily adjusted.
Exactly.
If the price would be adjusted, kind of word is there, amended word would have been there, then yes, we must have adjusted for both side movement. But here they are saying it is discretionary, so discretion should be used for the benefit of the investor at large.
Investors,
Right
shareholders.
approach for the merchant bankers.
Agreed.
Okay, Manoj. So Ankit, all points we have covered. Can I take the question answer?
Yes, sir.
Naran Dhaval is there? Yeah, sir. Okay. So the first question is, why affected corporation not approach judiciary for stringent action against false allegation and rumor? So friends, we are in democracy. Anybody, anything can come, and anybody can go, but SEBI has to protect the investors' protection, because allegation and other thing, court cases mean 10 years, 5 years, 3 years. So it cannot be done like this. Every rumor which affects corporate image has to be dealt with. Every trade, professional association, chamber should support corporate against false allegation, rumors. No, the point is, I think you are confusing with the rumors of that tarnishing the image. Here we are talking about the rumor, mean that something is happening in the transaction. So that rumor we are talking, it is not false allegation connected to that rumor that somebody is saying this MD has done something wrong in the other part of the world, or any allegation. It is not. It is about the transaction. So this circular is dealing only on the transaction side, not the other allegation and rumors. How to identify the rumor in mainstream media? I think this is very clearly mentioned that these are the earlier there was a confusion. What was the definition of mainstream media? That including the Facebook link, Facebook, Telegram, and other thing, and newspaper also. And there was a clearly in the earlier LODR that, and if you have a business in any part of the world, and something is coming in the other jurisdiction, that is also covered. Now, after the industry forum has given the definition, and it is a controlled now, and it is a limited. So all these things you can take the help of the various news channel, various news supplier are there. You can tell them, these are my newspaper, these are the magazine, these are the places, these are the online things. Whatever it is coming against relating to my company, they will inform, and you can get information immediately. So that way you can identify. Is there any criteria to determine whether the material price is, in this example of 3054 or 60 is not material? Dhaval, can you just explain this?
I think what the question I understand is that what is the criteria of how the price has been stated as material, is the answer would be the MPM itself, that where the MPM gets triggered and the price has been arrived, that is the calculation is to be seen.
Okay. Okay. Next question is also for you. Who will track material price movement? Is company required to track share price? Answer is yes.
Definitely, yes.
But is stock exchange is providing this calculation, because sometimes what is happening, the VWAP and the closing price and the opening price, people are sometimes confused in the calculation. So can stock exchange provide a window where they can give that this is now this company has touched the material price movement, you have a column, and in the another column you can say this company is crossing the material price line. Can
So
stock
not as of now seems, because this has been as per circular, it has been stated that the companies has to monitor their price and calculate the MPM. So as of now, the exchanges are not, or I have not decided that they will be doing it. But yes, this could be a scenario. So earlier in our discussion with the companies also, wherein we had a seminar for top 100 listed entities, it was mentioned that if in case after this circular and the ISF note, there seems to be some issues, or there seems to be issues with the companies for not tracking this, or there could be a scenario that the companies are not able to comply with this, then there could be a thought wherein this could be done. But as of now, there's nothing.
Yeah, so till now it is limited to 100 companies, top 100
Correct.
company. I think it is easier. But as soon as we are moving downward and let's say 1,000 companies are getting covered, then it will become a difficult task because the
Definitely.
compliance team may not be such big
Definitely.
there. And one thing I think is more important, the post facto list of price when we determine the price data for any purpose, like for calculation of take or open offer, the rumor verification would be in the general disclosures, whereas the price movement would be in separate table. So if there is a linkage somewhere, so that at least this time there is a spike, but similarly there is a verification or not. If that is coming, then it will be a great help for merchant bankers and other intermediaries who are working on these kind of transactions.
Yes.
Okay.
Dhaval, otherwise also what sir is trying to say is, many a times we have seen कि 90-10 wala simple calculation में भी there are mistakes.
Correct.
If we are talking about, till the time we are talking about top 100 companies, top 250 companies, no issues at all. But the moment we go down, they have a similar table or a column in the price chart would really be needed.
Then
by the
definitely, point taken. We'll definitely look
Yeah.
into.
Okay. Dhaval, ignore the price in the above quarter for, but is there a correct? I think Lakha Nair, please explain this again because it's incomplete. What is meant by business operation? Whether the listed company need to have business operation outside India, or group companies or listed company incorporated outside India and doing business is also business operation for listed company. I think all will cover in business operation. Okay. Madam, so do any capacity expansion plan proposal need to be submitted to the stock exchange regulation 30? Answer is yes.
Yes.
What if post denial of rumor, there is a twist in the tail of, and later company goes head with the so-called rumor transaction, will be non-compliance? Dhaval.
So what the question seems, what if post denial of rumors, there is a twist in the tail, and the later the companies go ahead with the so-called rumor. So taking an example, the company will first say that there is no amalgamation or merger. Could it be, taking an example? But post the rumor, say for example, within a couple of days or 3 days, the same company will come ahead and say that there was an amalgamation or merger. So definitely that will be seen as how it can be treated, because if the company was aware about that the transaction that is going to happen, so basis the ISF note, the company could have given a scenario having a generic answer or answer wherein it is not a denial statement, because referring to the ISF note, they have definitely given the draft of the response which the companies can give, wherein the wherein the transaction is not occurred or is not 100% sure by the company, but they are under discussion.
Yeah.
And hence, response is to be given in such a way where there is a no denial for that. But if the
Okay.
company is denying and definitely after that they are stating that the transaction has happened, then definitely it has to be seen that what could be done in that scenario.
So Dhaval, the person who is asking this question, I think they must read the ISF note also and the stock
Definitely.
exchange circular where ISF note is there.
Yes.
So
I
this
think
is
ISF note is in very, very briefly, they have mentioned everything.
Yeah.
All the scenarios where the company could have queries or could have a concern, everything has been stated in detail.
Yeah. So you can just read this and you will realize that if there is any rumor, anything which you don't want to communicate, just read this where you are communicating without without informing the clarity on this transaction and you are complying also. So follow that and it will helpful to you. Any idea why the filling up the vacancy extension has not been extended to the entire board, even independent director in addition to KMP? Ankit.
No idea as such, but why it has not been extended? Because in many cases, appointment of directors also requires regulatory approval. But I believe at this point of time, it is only there for the KMPs, even only CFO, MDCU.
Okay, Narayan, can you just tell why this is there?
Sir, you're on mute.
Unmute karna padega.
They have extended it only to KMP, and as you're aware, they have neither extended even to the compliance officer nor to the board. With logic, etc., we can definitely, and of course, there are some companies like defense and aerostructures
Media.
and media where the concerned regulator's approval is required before you get into the board. But the only answer could be if you are knowing that a director's position is going to be vacant, you have to do your probably all your homework much before you get in. That could probably be the answer that why they have not extended it to the whole board, nor have they extended it to CS.
Okay. The 2 days pre-notice is applicable with effect from?
Already applicable from the date of notification.
Okay.
Become effective, yeah.
Okay. So,
Already.
So Manoj, Anjali, Ankit, Narayan, or Dhaval, you want to say anything else relating to this circular? So Dhaval, I will start with you. Anything you want to communicate?
No, I think that was it. I think we have covered everything in brief. So I think that was it.
Okay. Anjali?
Any of the rumors which is there should be replied because now exchanges are even asking for MIS reporting. If you deny anything and tomorrow it happens, exchanges are asking for the MIS reporting as to who all people a particular transaction was shared with. So there will be unnecessarily complications. So if something is there, one should accept it.
Okay, Manoj?
Sir, I think this is just in the start, though the law was already there that there should be regulation 30 disclosures were there, then obviously PIT regulation is there. But this rumor verification and price movement is a new concept, but this concept will keep evolving over a period, I think. This is just a start. There will be several scenarios where there may be a further adjustments required. And I think SEBI will come out with more clarification and circulars on this. So we should be ready and keep tracking all these development before it goes to the downward company, the smaller size company.
Okay. Ankit?
I think, sir, this is, I think, first of all, this is a fine example if India Inc. and regulators work together because the way ISF has worked out this note, that would ease the compliance burden a lot, brings clarity on a lot of issues. And I think if similar things can be extended to other items listed in Schedule 3 of Regulation 30, it would do wonders in order to ensure compliance, both in letter and spirit.
Okay, Narayan, your final comment.
No, so two or three things. Number one, as I said, compliance officer, where if it is black or white, it is very easy. You confirm or deny. But the more important point is where there is half truth, where you can neither confirm nor deny. And clarification would really be a very, very keen point. And the second is all things which we discussed today on behalf of corporate professionals, I think we should just broadly send at least those areas where we need confirmations or some clarification. Like we said, if the company is not able to find a market rumor. The second point was if you want to calculate unaffected price, what about negative? If the share price instead of going up goes down, and if I don't want to at that time have any advantage of an unaffected price, what do I do? What do you do on various other corporate action Anjali etc. is made? I think it will be great if, for benefit of all, if we just broad 3-4 points, if we make out and give it to Avishkar and Dhaval, so that they are able to take it up with SEBI, specifically the point which you mentioned, Pawan, that if there is no rumor, why should all companies infest the stock exchanges by saying we are not able to find out a rumor, etc. These things would really help, really, at the end of the day when we have a seminar like this.
Okay, thank you very much. I think we have explained this, explained the logic also, and we have discussed the all aspects which has come in the circular. The point is there are some few points, few questions, few confusions are still there. We will compile this, and in consultation with the stock exchange, we will submit to the SEBI that these are the issues which we require some clarification. With this, I thanks everybody, Narayan, Savitri, Dhaval, and Dhaval and his team, and then Narayan, Ankit, Manoj, and Anjali. They have given their point of view and their expert point of view. So thank you very much to all, and thanks all participants, those who have shown the interest. And no doubt, it is a very important topic and important things. Today, it is starting with 100, but it will go to 250, then all other companies. And simultaneously, it is also clear these big companies can manage, but a small company cannot manage this type of thing. But system should come. I have prepared one note that how to manage the rumors, and that we are discussing in the next industry standard forum, where the in place of every company is doing something, it is better that the stock exchange should collect information, charge from the corporates, and then ask them various questions. So we will discuss this issue separately once the concept paper is finalized and discussed, and then we'll come back. So thank you very much all. And this journey of knowledge sharing will continue. The next webinar, which we are proposing to have in the fast track merger on 7th, the next Friday at 4 o'clock. So I'll request all the people, because it is a fast track merger. It looks like fast, but it is not fast. So we have to just understand what are the changes, what are the things government should do, and accordingly we will work out. With this, thank you very much. Goodbye.